Hi everyone, it's Stuart here again, Wednesday the 30th of July. Welcome to the proptrade.com. This is our live event for the FOMC. I wrote non-announcement in our on our Discord blog earlier, and it's going to be a bit like that. It's really what the markets are going to be looking for. I mean, there's obviously going to be no rate change from the Fed this afternoon, this evening. Or this morning, wherever we are in the world. It's really going to be what's how he handles the press conference about, we're data dependent. We are, we will cut rates when the data, in our opinion, suggests that we should. Blah blah blah, and nothing's really changed from there. Obviously, the political pressure from the Trump administration is absolutely massive and sort of ranks up, seems to crank up each day. The data today has also, over the last couple of days, also put pressure perhaps on the Fed to do that. The private payrolls were much better than expected, coming in at 105,000 from that very surprised significant decline last month, and they've been revised higher. So from a negative 33,000 coming in at negative 23,000. But we've come in a big 30,000 above the 77,000 expected. So it's also sort of putting pressure on the ADP, the private payroll company that produce this. It's sort of undermining their the credibility of these numbers. Core PCE was much better than expected. GDP was a big surprise, coming in at 3% on an annualized basis from a negative, sorry, from an expectation of 2.5%, so a big rise from last time. But first quarter, a decline again of half of 1%. It hasn't been revised, which many were thinking that might have ticked back to at least zero, but it hasn't. So obviously the panic of the first quarter. The panic of April onwards from Liberation Day, and then the front running of all the buy-in orders. It's obviously been perhaps more significant than we'd expect with the GDP at 3%. So really, it's the second half of the year, as everybody's always been talking about, is the key bit. Is inflation going to start to tick up? How impactful are these tariffs going to be? We've got this deal with Europe, much less than expected. There was India has talked about. I think there's talked about a 25% deal on that. I think I was getting kicked around today. Really, the Fed are very much in a corner. Whether it'll get, I would guess the press will be asking him at the press conference again about the data we've seen in the last few days, because I say it's perhaps better than expected. We'll just concentrate on the US data in a minute. The JOLTS numbers yesterday were down again. The consumer confidence ticked back up. So this is a big sentiment, as we talked about yesterday, a big sentiment indicator that had fallen off a cliff, really. We were at... as Trump came in December and January, we were at consumer confidence way over 100. It's 104.7, I think, 105, something like that. And so down at 95, 94 as it went to was significant. And we've seen quite a significant bounce back in that. Jobs remain quite robust. We've seen that again. As I say, yesterday's JOLTS numbers, ADP was much better than last time. So what happened last month was we had the flip from non-farm payroll. Non-farm payroll was much better than had been expected. So perhaps if this turns around this month and non-farm payroll comes in under 100,000 tomorrow, not tomorrow, Friday, that might turn that on its head. But we have had quite a strong rally over the last week or so in the dollar. Lots of short positions in the dollar being closed off. More than anything, we've had a big rally. We had that big rally to euro dollar to 118, and we're at 114, under 115 as we speak at the moment, 114.80 at the moment. And so the pickup in the dollar has progressed over the last few days. So obviously it's interesting to see what the statement says. I'm not really expecting any change. No. If we are going to see a rate cut, it's going to be earliest. It's going to be September, because obviously there's no meeting or announcement in August. But again, many are seeing that it might be more the political pressure that's mounted against the Fed on that as well. And remember the chatter we had a few weeks ago about replacement of Powell and the candidates throwing their hats in the ring, the Kevins. And others, Michelle Bowman as a possible female leader again. Yeah, I say the press conference will be particularly of interest in about half an hour's time. But to say the statement itself, interest rates will remain in the range 2.25 to 4.25 to 4%. There's no question about that when we see that in 4 minutes time when that comes through. But obviously, lots of other data has been kicking around today. So the highlight or the attention has been caught by the GDP numbers. We got a raft of earnings numbers as well. We got the 4 of the big tech behemoths reporting tonight and tomorrow night. We got Microsoft and Meta tonight. Robinhood, Arm, Ford, lots of very A+ names reporting tonight. So earnings continue to hold relatively positively. I said there was a few exceptions that have not started to add forward guidance. That was held up in the first quarter. The second quarter, many companies are still adding guidance forward, sort of accounting for the tariff impact. UPS yesterday, interestingly, didn't, and they got clobbered. I think they were down 5 or 6% at one point yesterday, UPS. Elsewhere, lots of other stuff going on. The Bank of Canada also announced their rate statement. Again, nothing changed there. They've stayed at 2.75%. Nothing out of Canada. Canada and Mark Carney, the new Prime Minister, is under pressure to. Having stood up to Trump initially, seems to be like faltering a tad. So Canadian situation in focus there. German GDP this morning better than expected on a quarterly annualized basis. Retail sales figures much better than expected, and GDP in France is better. So the data improving out of the 2 big EU economies, France and Germany. So we are seeing this gradual recovery in Germany starting to gain momentum now as well. So hence that rally we've seen in the euro in particular, and the German DAX went to that all-time high last month, didn't it? It's come off a bit in the last couple of days. So that's tonight. That's what we're going to have a look at in a minute. There's plenty of data still to come. We've got the Bank of Japan overnight. Big surprise if they actually are obviously not going to, but interesting to see again what they're going to say, painting in that corner as they are with regard to sort of stagnation that the political upheaval that the prime ministers had in Japan as well. PMI data from China overnight, retail sales from Australia overnight. So lots and lots going on this week. The key number tomorrow is that core PCE and the initial jobs tomorrow. So core PCE, remember, the Fed's preferred measure of inflation. So 2.7% is expected tomorrow. Look at that. We'll look at that data tomorrow as well. So back to tonight. Euro or the dollar continues to hold sway over the last week or so. This is the hourly chart on the euro. If we just click it up to the daily chart, you can see the recovery we're talking about. So that big drawdown we had, the big move we had on Monday, crashing us through the 20-day moving average and under the key 116 level. We took that short position. We hit target here, took 80% off the table, and we still got 20% on there. So we're just trailing this down, and we are now, as I said earlier, we are under 115. So that's 3 healthy negative candles, if you like. So we may see some consolidation around 115. We didn't last time, or we did on the way up, but we consolidated for a week or so and then lifted up to attempt the 118 high, but we stalled at this shy of that at the end of June, beginning of July, before we rolled back down. So next big line is that 114 level. So the trend remains positive for the dollar, and yesterday's close, the key thing I'll show you on this daily chart is that we're under the 50-day moving average, and that's the key message from this, the first time we've been under the 50-day significantly since the beginning of June. So June, July, we've been above the 50-day moving average. We now come under it. Sorry, what we're talking about? We're talking about down here, aren't I? It's more longer than it was. The beginning of May, we touched it, but we haven't actually been under this 50-day moving average since the beginning of the year. What am I talking rubbish there, wasn't I? Sorry. The beginning of the year and the big rally we've seen in the euro. and the weakening of the dollar through the tariff upheaval and the policy, sort of the US policy concerns that really freaked out the markets in April as we crashed down and stocks have come back. So dollar front foot last week kicked off, and big further movements this week. The trade deal with Europe, Japan, India, and obviously China talks concluded with no agreement, but it all sounds pretty successful. It looks like we're going to push back the first of the tariff deadline for the Chinese was the 12th of August. It looks like that's going to get put back another perhaps, I don't know, 9 days, which then gives Trump the political leverage to go and meet Xi Jinping, or Xi Jinping to come and meet Trump. Depends where the meeting takes place. So it's all spinning around quite nicely for the president at the moment. But anyway, euro down. Dollar still remains on the front foot, and that's the same against all the majors. And I say we're short across the board here. We've got open positions on all of these majors to the downside. The yen was the only one that didn't perform yesterday, as we were long. We was 28th, wasn't it? On Monday's night, we went long here. It didn't look like it was doing anything, but we've spiked to. Actually, no, we're not in target. Target's here. From it says the 21st should be the 28th size, but yeah, I think that was where we got filled from 48.60. I'd have to check the actual dates, but anyway, the yen held up a bit yesterday, but the dollar's come back again today, and we have actually spiked to that first target level, I think, today. I've been out last few days. I haven't been around my screens much, so I'll update everything later on tonight, probably possibly in the morning, but anyway, I don't think I updated last week's positions either. But anyway, we'll do all that and bring you up to date with where I am on my own personal trading. So yeah, dollar up against most of the crosses. Dollar CAD, back to 138 now. Aussie collapsing from 66 through 65, 64.35 at the moment, 64.63. There we are. Sterling 132.8. That's been the biggest move. As we said, 132 is that next big downside target. If once the 135 level had gone and the 134 level didn't seem to hold any sway on Monday when we collapsed through it. So again, another one that's taken out target one, and we've still got short positions open on, say, all the major crosses against the dollar to the downside. So the statement is out, actually, isn't it? Let's have a look if there's anything in there. Fed keeps rates change. Bowman and Waller dissent. There's not a particular surprise there. Looking for to the White House, really, from the Fed across Washington. Powell said earlier they will probably not cut rates today. That's a complete non-news item, isn't it? But we have these two players, Michelle Bowman and Chris Waller, trying to probably get the hand of the president who wants rate cuts. And now, as I say here, let's have a look. In support of his goals, the committee decided to maintain the target rate at the federal rate reserves at 4.25 to 4.5. The extent of timing and just adjustments, inflation. It's virtually, I can't see any changes from last time here. Excuse the top of my head here. So I'm reading this from the Fed's website. Economic moderate in the first half. Unemployment rate remains low. Labour market conditions remain solid. Inflation remains somewhat elevated. Somewhat elevated. Okay, so that's a different phraseology. So before the decision, the market was pricing 70 basis points for September and a fully priced in for October. So yes, 17. So possible September, definitely October. We'll have a look at what the CMC is looking like now. So I'll give that a few minutes for that to update. This is obviously a free website, so it takes a while for it to update on that. It probably hasn't already, the FedWatch tool. Yeah, no, it's still set for the July today's meeting. There was a 3% chance of, so even though I thought that was a bit elevated, it wasn't. We'll come back to that in a minute. Anyway, that's what it's still looking like at the moment. 97% chance of no change. Obviously, I don't know why these 3% have come from. It's obviously speculators somewhere looking for potential situation, but that hasn't. I'm saying that update. No, that's where we are. So yeah, September. So that's July. September is there's that hasn't updated either by the looks of things. Just check that. No, September's still 61%, 38% still expecting no change by then, but yeah, 61% chance of a rate cut. And then, as I've just said, the October number, sorry, the October meeting here, the end of October, the market is now very much priced in that they will have already gone down and possibly a whole point by 30%, thinking by a whole point by the October meeting. I won't really have moved market. Let's use the sterling as an example here. We are now 10 minutes into the sorry, 7 minutes into the announcement, and dollar remains very much on the front foot. We've ticked up here in this final hour before the final half an hour before the meeting, and as the news came out, it sort of dollar give away a wee bit, but it's very, very marginal moves on that. The stock markets in the US all remain in green today. It's more to do with the earnings reports. We've got the small caps actually doing the best. The Russell 2000 up the most, and the yield has ticked up. It was 135. 32 about an hour ago when I looked, and I'm just seeing it now. It's 134.02, so it's come down nearly a whole half a basis point. So the fact that Bowman and Waller have actually thrown their hats in the ring, talking for cuts now, suggests that obviously something will definitely happen in. Or not definitely happen. Nothing's definite, is it? This market, but something will happen more significantly by the September meeting, pending the impact of the tariffs. The data is, it's been remarkably robust. The fact that consumer confidence we saw yesterday coming back quite significantly, but really the impact of tariffs are yet to bite anybody significant in the US. I mean, obviously there's for many, they've been for some sectors they've been in place, but the countries are doing their deals, and the framework agreements, which is what they really are. There's not really a lot of detail in there. I mean, a country like the UK, which heralded this framework deal that they got together, there's not much differential in the amount of volume that of the goods that the US and the UK share. It's really the services side of things, which is where there's the big, or the invisible earnings, as we used to call them in the UK, is where the big numbers are. But yeah, dollars has continued its give back of the strong gains it's had. But I mean, look, it's moved from 132.84 using to 182.33, so 15 pips on cable in the last hour or so, compared to the huge moves we've seen over the last 4 or 5 days. These massive moves down from 136 on July the 24th, and here we are less than a week later, and we're down under 150, or back to 133 from 136. So a few 15 pips in out of 300 is nothing to get too uptight about. But that trend, is very much rolled over and moved over, having breached this low. So whether the dollar will come back to be under pressure over the next few weeks as we move into the lull that is August, we'll see. But certainly here, technically, here on this daily chart, you can see we need to be back to this 134 level if sterling's going to get back up, and the 20-day is still it's all the way up there now, 134.65. So the trend last week or so, it's very much set, and the next downside target will be that extended fib level at the 132.40 level, with 132 being the next big round number. If we zoom that in, we take up to the weekly chart. Just do a quick analysis of this one. You can see there's that 132 a 40 zone. There's the 132 on the weekly chart. Big line in the sand, and then these weeks here at the beginning of the spring takes us to the extension of that fib level again, which takes us down to the hugely rounded number of 130 itself. So two big levels to the downside on those higher weekly charts. Excuse me. So dollar still continues to hold up. As I said, the excuse me, the stock market's still holding sway, still positive on the day. I think had 2 down days here. The Dow here, as an example, has come back up. But again, on these higher daily time frames, we're still relatively positive for this, certainly for this time of year. It's really the yields that have come back down. I think it's not really a surprise we've had this split between Bowman and Bowman and in the Fed, the two voting against it. It's just the fact that they went public a few weeks ago, and the fact of the voted today, so Bowman, Chris Bowman, and Michelle Waller, sorry, Chris Waller, it isn't Bowman, somebody's written Chris Waller here for that. So yeah, let's see what comes of it. All this machination of data that's coming out of the big companies reporting their earnings later, what the jobs numbers are going to look like on Friday, what the weekly claims are going to look like tomorrow as well. So the trends we saw turning for the dollar seem to have held up. So let's run through them as well. So SPX 500, the S&P 500, two down days, Monday, Tuesday. Again, we're up today. All-time highs on Monday, intraday all-time highs, and come back down, but that's fairly healthy. We're still holding up. 20-day moving average now approaching 6,290 to the upside. So again, don't get shaken out. The trend remains locked in. The Nasdaq, lots of pressure on the tech companies to perform. We had that positive news for Nvidia yesterday. They were getting that big order for their new chip yesterday. It's a D20 or something it's called, isn't it? But we'll see on those numbers. So we're up again today. New intraday all-time highs yesterday for the Nasdaq. Looks like we're looking for another all-time high close on the Nasdaq today if we hold it. And again, as I said before, the Nasdaq is outperforming the other markets, save the small Russell 2000. So we've bought back the initial dip on the news. So looking for a rate cut, so that looks like that is coming, and obviously that benefits the tech. The tech companies tend to be more sensitive to rate cuts than the traditional sort of utility type companies, the industrials on the S&P 500. So tech much more vulnerable. Tech companies much more beneficial from interest rates coming down. So it may be perhaps a jumbo cut, one and for all, but it's still, 2 are still on the table, September, October. It may slip to October and December, but we shall see. So yeah, Nasdaq 100 up 0.4 of 1%, the S&P up 0.2 of 1%, and the Russell 2000, I said, up 0.8 of 1% on the day. And obviously the non-surprise numbers, non-surprise announcement from the Fed hasn't really moved things. Elsewhere, Bitcoin 117,600. So we continue to consolidate at these highs. That divergence we mentioned last week on the RSI here and the MACD is still in play, and prices still holding up. So let's see, and as we saw yesterday, this is a steepening, so there could be a significant breakout from here. But first, you need to see the break of the 20. Technically, I'd see that channel break in that 216,400 level, the bottom of it, where our 20-day moving average is. But we could then see quite a rapid decline to the 50-day moving average, and that previous resistance, the previous all-time high, around about that 112,000. So there's a bit of a window there of potential to the downside. If this holds, and we see a turnaround in these other oscillators, we could see a break of the 120,000 level, which needs to happen if we're going to then take the next level to a new all-time high above that 123,000 we saw. So Bitcoin consolidating at highs. Don't worry too much. It's hold your place. Technically, we're still positive. It's gone on for a while, but there's signs, caveats for this decline here of perhaps a move down, and obviously Bitcoin can move very violently. So beware, my friends. I'll just be prepared of what's happening. So look and keep an alert around that 20-day moving average, and certainly the 50-day moving average around 112,000. Oil's had a really good run. We're still long. Interestingly, my system shows you the vagrancies the system's in about. The system, we went long here on UK oil earlier in the week. We had a blockbuster breakout yesterday, big through T1, and we've closed 80% of it. We're still long this. We've pulled our stop loss up to around about just shy of the previous target. The inventories earlier in the week supported that. The private inventories yesterday, big build, so it helped us move higher. The official inventories have been lost in all of this, all of the news, but again, a huge build, 7.7 million barrels. So restocking of Cushing is very much in play there. Hence the move in oil over the last couple of days. And here, UK oil, or Brent, as it's more commonly known, we call it here on our derivative UK oil, 73.24, the one we tend to talk about more. And I say, interestingly, my system didn't trigger along on US oil for some reason, but anyway, it did on UK oil. But anyway, here, the key handle were over 70. That was the key thing I wanted to bring to your attention today. So 70 has been breached. We're sort of out of this our sideways channel, which we'd been in for all of July, 25th, when we crashed into this at the end of July. So the tariff retaliation low here at $70, which was here at $71, has been tested. So we're through 70, and we've tested 71 today to the upside. You can see here the day high 71.21 so far. So oil picking up quite significantly in the last 3 or 4 days. Lots of pressure on China to stop buying, and India to stop buying oil from the Russians, or Russian sanctioned oil at the discussions between the trade representatives in Chinese. There was no noise from the Chinese that they're going to do anything like that. So we've got this continued move higher for the oil price as well, and the inventory numbers adding to that pressure to the upside as demand seems to be okay. So big move this week for the oil market. Gold back to the key support level, and actually currently, as I speak, currently trading under the 3,300 level. So this pressure we've seen on gold over the last week or so, a bit like that, as the dollar's picked up, gold has obviously suffered from that. You can see, as we said earlier in the week, this cross on the MACD, the descending RSI movement there. Let's move these down a wee bit. Tail a bit big. So the breach of the 20 and the 50 day, as we mentioned on Friday, was significant into the weekend. We tested 3,300 on Monday, bounced a bit yesterday, had a positive day, but a big engulfing candle again today. So this is looking negative, relatively negative. A breach of this on an end of day basis last happened here on the 27th of June when we came back and have sort of rippled higher. That's all that really is. So down, 3 days up, a slow move into it, bounce off it again. We went higher, so we sideways, went higher, and then have fallen again. So that level and that level sort of parallel. So we could see a breach and move down. Technically, where do we go? That last leg was down here. If we take this and we do another fib to that high there from that low there, you can see that the 61, the initial of that leg here, this leg here, next level to down is 3,230, 3,230, and the extension of the extended leg from here at the 9th of July to the top of the 24th of July takes us below the hugely significant 3,200 level. So that's our next two downside targets if this break of 3,300 is validated, which would need to be a close below 3,275 on an end of day basis. To take us back higher, we need to be I can't really make that any bigger. I need to be moving back over this 3,000 and 3,350 level, where the 50 and the 20-day moving averages are now consolidating. And you can see that that consolidation of the 61.8 and the 50% fib levels as well on these two last legs. And this obviously this current leg is still in production. Too early to say that this is the floor. We've tested it once, which is typically up and then down. So let's not jump too much to say we're going to collapse all the way down to 3,200, but we need to see the continuing strength of the dollar. It might run for a little while more, and so we would need to see a break of certainly of this 3,300 level, and below that is a 3,270 needs to breach as well. So it became an extended, or that became the floor of this extended move down from this previous high here at 3,000. And when we couldn't get to 3,500, everybody looked like it looked inevitable. Didn't happen back at in the middle of June. So you can see there's that triple top area we've talked about before as well. So yeah, head and shoulders, W patterns, M patterns, leg patterns, whatever way you trade this. We've been weak for over a week in the gold market, and for me, my key, take it all off. The key was Friday's breach of the 20 and the 50-day moving average. That's very significant for me on Friday. So 3,300 was the target, initial target that was hit virtually straight away on Monday. And then see if where we go on the body of the candle on these daily timeframes. So watch gold to the downside as well. So what else have we got to talk about? Well, we've got some open positions still. I haven't updated anything for a while. I apologize about that. Last night, let's just go through what I posted last night. I think somewhere in the money, somewhere out the money. We Aussie, and as I said, Aussie and Kiwi joined the other major crosses. The Aussie, there we got to target 180%. That's hit today, and the Kiwi. Well, the other, I say they were the others were already in place. Again, I haven't updated these, but I think these levels are right. The numbers are incorrect. I'll update everything on Discord later, guys. But that's another target one's been hit on that one. The others were less. There were a bit of there was another three that were a bit strange. Euro CAD. There was Euro CAD short, Euro Swiss short, Swiss yen short, and Kiwi CAD short. I think that one's. No, no one's been stopped out. Let's just have a quick look at those. So it's let's just do these. They're all different, so I can't Euro. So Euro CAD. Let's go to the daily yesterday. So the 20-day actually went on Monday, but this triggered short. There was short last night, so that's still open. I haven't actually put any of these. That can't be right, can it? Oh, it's 25th. I'm saying that's kind of 29th. It wasn't. It was it was the 29th. That says May. So I obviously haven't put these on, but that was short last night basically. So that may have hit target one already. I'm not sure from my trading platform, which is on a different screen on a different platform. So that's probably may have hit target one. Who knows? EuroCAD short. The other one was Euro Swiss short. Euro Swiss. Again, short there. That probably hasn't. That won't have hit target yet. It's one of those. I hate the Euro Swiss. It just doesn't really do anything. It's not really a trending system, but it's one I capture because I capture all the crosses, and it triggers occasionally. And it said take the short last night, so I did. So that's probably not going anywhere. Swiss yen was the other one from last night. Swiss yen, Swiss JPY. Swiss yen, that was short last night. That was ahead of the 20-day cross, interestingly. There you go, Samar. That probably has hit. That was a 30 pip target. That was short around about 184.9. So it needs to get to, that would have hit its first 30 pip target, I think, on that one. So that one's hit target. That one, those three have on hit target. And I think the other one was turned around really aggressively this morning. It would have been closed out. New Zealand CAD was the other one, wasn't it? That was short, but I'm sure when I looked at it this morning, it'd gone the other way. Hang on a minute. No, that's today. So that must have turned around. It must have been up here earlier this morning, but that's certainly hit target. I don't know. I haven't actually marked these up, have I? I'll check all of those. But they were the 4 or the 6 from last night, and all of them bizarrely in the money. The last one at Nazi Kiwi CAD is suddenly down now on the back of. That's the daily chart. So let's have a go to the hourly chart from last night. It was short up here. Let's where are we? 29. Doing short from here. Yeah, that's retraced quite significantly during. Might have actually. What that looked like at 7 o'clock this morning when it would have been no, it's probably back to where it was. It might have actually closed out because it's might have reversed too much at 7 or 8 o'clock candle. I didn't check it personally myself, but the Stride system would have had a sort of a percentage out of the money indicator. We might have closed it out. The Kiwi CAD. I mean, it's Kiwi CAD. I mean, it probably may have hit target yet, but anyway, I'll update all of those later on. As far as tonight's concerned, or tonight now, let's have a look at now what's going on now. We got Aussie CAD potentially, Aussie yen, and Kiwi CAD. There's a lot going on. There's a lot of data flying around, so I'm not going to jump in on these yet. But Aussie CAD, Aussie yen. So Aussie CAD looks like a short position. Yeah, indeed it is. That looks healthy enough. 30 pip target, 50 pip stop loss, something like that, from 89.18 at the moment. Looking for 888. I like that number. Aussie yen, also a stronger yen today, so that's looking pretty healthy as well. Stop loss, looking for 95.60 on that from around just over 96.10. 96.10 on the Aussie yen for a 95.60 target tomorrow. Oh well, not necessarily tomorrow, but in the longer term. And that Kiwi CAD is also triggered on the higher time frame. The more conservative system. The one we got here on the screen is the overnight system. So yeah, that was probably did get closed out earlier this morning. But again, I'll have to check the system. I haven't checked it yet. So, but that's looking like that might be triggering tonight on the more conservative system. You can see that NTY, which it's been that would have been the interesting one. That should have really. But it's left it till now before it's looking to go short on the more conservative system. The more aggressive system, the one that we're in and out of quite quickly, that's got tonight. That's got CAD yen, pound Aussie, pound Kiwi. The DAX, interestingly, the DAX would be a short. DAX is a long, interestingly, on an end of day basis. The last few have not worked out. on the this strategy. So, and it's not really, it's designed really for more for forex than indexes. This particular ticket. Actually, let's just tripped again. So CAD yen looks like a possible short. The stop loss looks a bit tight. Yeah, I'm not sure about that one. That's a really. Let me show you the CAD yen. It's really sort of. Let's see why that'll probably look on a CAD. Oh, there it is, CAD yen. Much of a sideways action now. It's non-trending. You know, I'll probably won't take that one. Look at that. Don't like the look of that. You know, that's why I still trade manually. System says go. I go most of the time, but sometimes you get so many triggers. You have to take a decision. Aussie yen looks a bit better. Aussie yen, Aussie pound, I should say. Pound Oz, isn't it? Yeah, that's looking nice. That's okay. That's looking like that's a potential long position tonight on that one. So that's probably going to get filled, pound Oz. And pound Kiwi will be the same, I'm guessing. We've been quite good with these pound against the both long and short against the Antipodeans recently. Yeah, similar pattern there. That's looking like that'll be taken as well. So pound Oz, pound Kiwi probably definitely go. DAX I probably won't, and CAD yen I probably won't, but I'll update you what I actually do later on tonight. So there we go, my friends. Hope you're all well and it's all been of some use to you. If not, let me know. Either way, obviously. So in summary, we have the Fed decision as expected. No change, remains at 425 to 450 for the rate, 4.5 here you can see on the calendar. Key thing was the split. We had Bowman and sorry, Michelle Bowman and Mr. Waller play into the president, perhaps looking for rate cuts. So there's a split in the not for the first time, split in the Fed. Powell plays a straight bat. The economy is in a sad position. I think the press conference as it started, it's not quite started yet. Oh. Kluger did not mouse. The Fed said the economic outlook remains elevated. Growth, as described, is moderating, remains low. Unemployment, so that could be a key as well. The unemployment number on Wednesday, solid. Labour markets, inflation somewhat elevated. No hints at future cuts. It remains data dependent. Wait and see mode. Repeated, it will carefully assess the incoming data, the evolving outlook, and the balance of risk. He loves that phrase, balance of risk, assessing incoming data. And having been reprimanded publicly a number of times by the president and tried to be put on the spot in his own building, the federal building, the surprise visit by the president, he sort of fought back with some of the quotes that the president was using. But there we go. So 10-year yield 1.5 basis points up 434.6 from that 435 area. We'll see if he's starting to speak. So I'm going to go off and watch what Mr. Powell has got to say. He's still reading the statement. It will be the most will be in the one championship in press. He's talking about tariffs, isn't he? He may take a swipe at Trump, given at the press conference. Obviously, nothing in the statement about that, given how much to take personally, obviously both privately and more importantly publicly from the president. So we'll see if he gets drawn on that. PCE on Thursday, absolutely key for them as well, and how much pressure Waller and Bowman can bring is somewhat questionable. Probably of the two, Waller's probably in the hat for the getting Powell's job, but it's more likely to be perhaps with Kevin Walsh or the other Kevin that sits close to the president, has been very close to him for 10 years. The current economic advisor to the president. So lots going on this week, as we said. The dollar remains, just go back to the majors, very much on the front foot, as it has been for the last week or so, from being very much on the back foot. We'll leave you with the euro fighting to hang on to 115. We go to the hourly chart. We've moved down earlier today. We've come back to 115 since the announcement, but that's a 15-minute chart. So we continue to pull higher. The dollar's weakened a bit more than it was on the announcement, and 115 for euro is key. Are we going to remain under it? We went under this afternoon for the first time in a long time. Let's take this up to the, as you said, as we saw earlier, we take the daily chart. You can see 115. Long time since we were down under there, and that was the 23rd of June. So where we finish tonight will be key, either above or below that key level. So I'm off to watch and listen to what the chairman has got to say. I'll see you tomorrow. Tomorrow is Thursday. As I say, tomorrow's Thursday. We got we got the initial claims tomorrow, and another big day ahead of non-farm payrolls on Friday. So take care, be good. If you're new to the proptrade.com, do come and join us. We are, just what it says on the tin, as a famous advertising slogan used to say in the UK. We're not hiding anything. We're open, we're transparent, we're clear. If you want to do it in a rush, there's the express challenge. If you want to do it in a more standard approach, there's a two-step standard phase. If you want looking for a bigger profit share, 90%, have a look at our pro challenge. Our pro challenge is very well priced. As I say, if you're new to us, new 25 gets you a huge 25% discount off what are already, in my humble opinion, obviously I'm a wee bit biased, really well priced ways to get into trading. A 50,000 pro account, $350, you get 25% off that. So for just over $250, you get a huge 50,000 simulated account, equity account to trade in. And if you are a pro trader, if you've been around a little bit, these are the big, you want to be looking at these accounts. Look at what the targets are, 10%, 5%, daily loss 5% on these. We're still looking, we don't want to be losing more than 3% on only one particular trading idea. You get to trade the news. You get a 90% profit split on your funded account. Once you get there, you get your funded your payment back on the second your second payment, and 90% of the funded simulated fees that you make, funds you make, turn into real dollars, real crypto, however you want to be paid. Every Friday, and we don't mess about. Just have a look at our website, look at our Discord group. That's where most of the chat is played. I know a lot of people haven't got Discord or don't use Discord, but it's a chat bot that most of the prop terms use, and we are, this is our general chat, and things get answered really, really quickly. Katzen, Thompson, Johnson, our three main support guys are absolutely on the ball. I'm going to say 24 hours a day. It's not 24 hours a day. They have to sleep, bless them. But an extended support, basically. So wherever you are in the world, we're here to help you. And really, we want you to be successful, because if you're successful, you tell your friends, they come and trade with us, and more people at trading, the more people hear about the proptrade.com, the more successful we are, and happy we all are. Okay, so take care. I'll see you tomorrow for the claims and the rest of the data deluge that we're seeing this week. Don't forget Microsoft, Meta, Robinhood, Ford, and a whole plethora of companies still to report their earnings after the market closes. 8 o'clock GMT, 9 o'clock my time, 11 o'clock Eastern European server time. So take care, everyone. See you tomorrow. Be good, be safe, and all the very best to everyone.